Hey everyone, welcome back to Poplar Preparedness. There are definitely cracks appearing in the economy. If you have not been paying attention whatsoever to the stock market, through the end of September, the S&P 500 was down 24% since the beginning of the year. 24%. The NASDAQ has been down 33% since the beginning of the year. We see that the Federal Reserve has been tightening. They've been pulling a bunch of money out of the money supply. It's just papers and, ones and zeros and stuff like that for the most part. But as the stock market has been crashing, basically we are seeing trillions and trillions of dollars of value disappearing off people's books. Now that's just paper value, right? So someone puts in $50,000 into their stock market portfolio or whatever, or $5,000. The thing is, even though that may have gone up 2 times or 3 times, and they're looking at the $5,000 and now $15,000, they're like, wow, I made $10,000. And it's like, well, no, you didn't. You put $5,000 into this vending machine, and you know what? There's always a fairly decent chance that before the end of the day, you may not actually get anything out of that machine whatsoever. So really, have you made any money? Well, it depends on when you pull your money back out. And just because you have paper returns of plus 2 times or 3 times doesn't mean you actually have that money. And yet people look at their bank accounts, look at their brokerage statements or whatever, and they say, I'm worth X amount of dollars because that's what it says on the paper. But here's the simple fact is they've taken their money and they've put it into the system. And if everyone pulls their money out of the system all at once, you know how much money everyone's going to get? A lot less. A lot less. Because the only reason the value of those paper assets are so high is because everyone has their money in the market. When people start pulling their money out, we have stock market crashes, we have all this stuff, and we've seen the S&P 500 and the NASDAQ and stocks cratering. And we've seen trillions of dollars of paper assets disappear. And people are kind of freaking out about it. Because there was all this money. It wasn't really money. It was fake funny money. But now people are realizing that that fake funny money isn't really there. And they may have to adjust their lifestyle accordingly. When people keep taking out new mortgages on their houses, and so that they have very little, if any, equity in their house, and all their money's in the stock market, and their cars are on loan, everything that they have basically seems to be with a loan attached to it. They don't actually own anything except the money that they put into the stock market. And as they see those numbers start dropping, they need to start deciding whether they can actually keep paying that loan on the boat and on the pool and on the kitchen they just redid and on all this craziness. A lot of Americans, a lot of people in other countries are in a similar fashion up to their eyeballs in debt. They're very much like the government that they are under, which is also up to their eyeballs in debt. The UK is up to its eyeballs in debt. United States, Australia, don't even get me started on Japan. Gosh, they're just way up to their eyeballs. But where we're seeing the biggest bang coming right now is in bonds. Government bonds particularly, but also corporate bonds. As interest rates go up, if you own a bond, okay, say you put $10,000 into a bond, then the interest rate on that bond goes up. That means the value of your bond went down. Yeah, I know. Isn't it crazy? Bonds can actually drop in value as interest rates go up. Now, so many people out there are saying, well, the Federal Reserve is going to start cutting rates soon, and when they do, those bond values are going to come right back up, so just hang on there. Okay, what happens if the interest rate doesn't come back down? But Steve, the interest rate's always going to hang around 0 because that's normal. No, that's not. The interest rate normally is above the inflation rate. Wait. But what's the inflation rate? Oh, that's right. The government's saying it's like 9%, but in reality world out there, we're talking 20+%. So if the natural inflation rate is 20+%, then the natural interest rate is actually where? Over 20%. That's right. If it goes over 20%, do you know how much the value of your bonds are going to be worth? They're going to drop pretty dramatically and start approaching this universal number of 0. You're going to lose a lot of money. Bonds are going to get you creamed. The only reason banks and everything like that are still holding bonds is because they believe the Federal Reserve will panic and they'll cut the rates and bring it back down. And then the banks are going to make a killing off of it. But what if those interest rates keep going up? What if the Federal Reserve cuts the interest rates and yet interest rates keep going up? But Steve, that can't happen. Oh, yes, it can. Central banks lose control of their currencies all the time out there. And it can definitely happen in the United States, in the UK, the European Union. Central banks are terrified of losing control of their currency because it can happen. Argentina lost control of their currency. Yeah, ask them what their interest rates are. Turkey lost control of their interest rates. I forget if it was Argentina or whether it was Turkey, but it was like 75% interest rates. Whoa, 75? Yeah, folks, interest rates can go a lot higher, and they will start going higher when people just start saying, I'm not loaning you money because that's just insane. I want to spend that money today. Because the money that you're going to give back to me in the future isn't going to be worth nearly as much as the money I'm giving you today. I'd rather buy hard assets right now. And that is really starting to hit home. As it becomes clear that central banks are losing control and interest rates keep going up, that means countries are going to start defaulting. That means that stock markets, that bond markets have a lot further way to go down. You need to watch out for yourselves. You need to be careful. We're seeing a lot of cracks out there. Have a plan. And hiding in cash right now is kind of a losing game right now. 20% inflation means you lose 20% of the value of the dollars you hold today through the end of next year, roughly speaking. We don't know what inflation will look like tomorrow or the next month or next month, but I'm going to guess it's probably not getting too much better. So be careful out there with your investments. If you do have 401ks or IRAs that you got stuck and you can't put it into precious metals or someplace safe, you might want to talk with our folks over at Genesis Gold Group. You can go down in the description down below. They do a fantastic job of talking you through what you can do with your retirement plans. But if you have $100,000, $200,000 sitting in your retirement plan and you're being forced to put it into the market, talk to Jonathan over at Genesis Gold Group. The link is down in the description below. They are a sponsor of this channel. They are also Christian folks over there, but they'll walk you through options on what you can do about that. All right, folks, thank you so much for watching. If you want to watch another video from me, there's one right here on the screen. Otherwise, I will see you later. Steve Poplar, out.